Hello, everyone, and welcome back to the Velocity channel, where this is your bridge to financial freedom. You know, I got a call the other day, and this is actually a dedication because this person who we've helped debt eliminate, give them a plan. They asked CJ, which banks am I going to get these credit lines from? I mean, you suggested the roadmap, but can we get a little bit more practical? And today I want his answer to make sure it gets to you as well, all right? Before we get into that, all right, we're also going to be eliminating a large amount of debt in very little time using lines of credit from these credit unions, all right? Before we get into that, though, please like, share, and subscribe so that everyone around the world can know the power of Velocity Banking. So let's go ahead and go over these credit unions that you're going to need to get on your radar in order to get the highest limits possible. Now remember, with Velocity Banking, you do not need a credit card. You do not need a line of credit. However, we have proven by the numbers that they can be used, lines of credit, can be used as leverage to eliminate high interest debt. Let's go ahead and go over it. Alliant Credit Union, okay? I'm going to go ahead and make sure that all of the links are down below. I do not get paid to do this, all right? Navy Federal Credit Union. One thing to notice about them is that this is for military, but it's also military, right? And their families. So let's go ahead and see if you qualify for that. Vantage West Credit Union, all right? Right Pat Credit Union. We also have NASA. Now that was originally just for the astronauts. Can you believe that? But then they opened it up to us as well. So NASA Credit Union is going to be a good one. Service Federal Credit Union, United Federal Credit Union, and Global Credit Union. Let me go ahead and make sure that I add this in here. And it's going to be, maybe you didn't know this, PenFed, all right? Stands for Pentagon Federal Credit Union. I remember talking to a couple, shout out to Brittany and Matt. They said, CJ, we got lines of credit, but it's not to the limit that we want. And so I said, let's go ahead and check this out. In 2 weeks, folks, they went from 0 lines of credit in this particular area to $35,000 in lines of credit. I'll never forget that. I want you to make sure that you're doing your due diligence with these credit unions, okay? And you don't have to settle for just one. Because when you look at the lines of credit, remember, the more, the better, all right? Now, let's go ahead and take a gargantuan loan, okay? Which one do you want to take? Maybe one's good that's going to be $200,000. Yeah, that's a nice round number, right? Let's go ahead and take 200,000, okay? Let's say it's at 6%. Oh, yes, this is a mortgage. We're $1,200. Now, look. As soon as I say mortgage, people get scared, okay? Don't get scared. Because this method of banking will work whether you have a mortgage, whether you have a car loan, title loan, anything, okay? It's going to work because it's the math that makes it work, all right? $1,200 each and every month. That is going to be your minimum monthly payment. A lot of times we find ourselves in a bind because we've been taught to do what with our income? To segregate it. Is that right? So we're going to go ahead and split it up. They tell us to do the checking account, the savings account. Make sure you've got some in savings. And then we're going to go ahead and buy this with our credit card. We're going to make sure that we have groceries. I think that's a good thing to do, right? Oh, by the way, we've got a big mortgage, which this is what that is. All right, and then we have an auto loan, right? And then we segregate it all up. And at the end of the day, how much cash flow do we have? 0. Now, a minute on that. Why do I keep bringing up cash flow? Because I want you guys to get out of the mindset of solely or exclusively thinking about stacking. Because you cannot save your way to wealth. Can you? Investors Successful business owners, they think of terms of cash flow. That's how we think, in terms of cash flow. What is this going to net me monthly, right? What is this going to net me weekly? Okay, sometimes daily, this investment. Yes, it's 15,000. Yes, it's 20,000, but what is it going to net me as far as the cash flow is concerned? Because we're not only concerned about accumulation or stacking, we also are concerned about cash flow, and that's how you need to be as well. And you'll actually see that by the numbers. Now, we have the $200,000 that we're going to eliminate, all right? We're going to go ahead and eliminate that, but we cannot do it with the same mindset that got us in this problem. So this is what we're going to do. We're going to go, and if you're in Arizona, like I am, you're going to go to Vantage West, okay? Maybe you want to go to Navy Federal Credit Union as well. Whichever one you pick, make sure that you have the highest limits on lines of credit. Don't be shy, all right? It's just credit. So let's say we go to Vantage West. We say, listen, I need a $15,000 line of credit, please. And they say yes, because they're awesome like that. And they give you the $15,000. So let's go ahead and do this. We're going to draw this line here. Now you have a line of credit of $15,000, let's say at 21%. Now, the bank said I got to be out of this $200,000 in 30 years. But Velocity Banking says I know a way to get out of that in less than 7 years, okay? And this is how I'm going to do it. Now, I want to share with you that you may see me take these lines of credit all the way to the max. Why do you think that I do that? Well, because I know how powerful it is to get rid of a debt like this in the time that I'm doing it, so that I capture this cash flow as fast as possible. Remember, the key word here is cash flow. Now, whatever your situation looks like, it may look much different than this. At the end of the month, we are stuck at zero, and that's a problem, because $5,000 comes in, okay? That's the income. $5,000 goes out. That's the outgo, which leaves you with $0,000. But, okay, watch this. If we had a $600, let's just say, payment on our credit card, okay, or a $600 payment on our brand new line of credit, what happens to the minimum monthly payment if we're using our brand new line of credit from Vantage West? We're using this line of credit as our new checking account. What happens? What happens when we put the $5,000 in with that balance of $15,000? That's right. This minimum monthly payment goes over to the cash flow side. We don't have to worry about minimum monthly payments when we are using our line of credit as our new checking account. So the $600 goes over here. Now, CJ, how did that happen? Well, if you've been watching my hundreds of videos, you know what we did with that line of credit. We went ahead and deployed it towards the principal to get that principal way down to what? $185,000. Why? So that 6% can eat on the $185,000 versus that 6% interest eating at the $200,000. Because the smaller the principal, the smaller the interest. And so that's why we want to get rid of the thinking that we're always looking at this interest rate. Oh, You see people all the time, they get scared of the high interest rates. Oh no, it's going to 7. Oh no, it's going to 8, to 9, to 10. That's why those that are on the Money Max account don't care what this number goes to, because we know that we are not going to pay the way the bank tells us to pay. You and I both know now that $1,200 a month is not going towards the principal, but it's split, okay? And it's not in half. It's actually against you, okay? And the bank is getting the bulk of the money, at least at first, and then you are getting a little bit to place towards principal, okay? So that $15,000, okay? If you have a cash flow of $2,000, that $15,000 is going to be calculated like this, okay? You got a $15K balance. How long until you pay all of that line of credit back? This is your answer, okay? 15 divided by 2. You see, many times the answer is in the problem. How are you going to pay that back? And oh, by the way, CJ, isn't that 2 debts? You got to stop looking at lines of credit as debt. Okay, now watch this. 15 divided by 2 is what? 7 something? Right? 7.5. So 7.5 months. You're going to get rid of this debt. All right. So 7.5 months. You're going to get rid of the $15,000. Now remember that $2,000 is staying in there, right? Right? Because the $5,000 goes in and you have $3,000 that goes out. Now, whatever your money is, please stick your number in the denominator portion of this calculation. And then you'll actually find your months, okay? And folks, when you are paying your mortgage, your student loan, your car loan in this manner, you're not going to be out of it in 30 years. And can you believe they even have a 40-year mortgage as well? Okay. But you're going to be out of it in way less time. Look at where you are in 7.5 months. Would you like to know where you are in 7.5 months with doing banking this way, right? Remember now, you're at $200,000, okay? $1,200 a month, all right? And 30 years in this loan. But you're using your line of credit, brand new line of credit from one of these credit unions. You got the $15,000 at 21%. Where are you at in 7.5 months without Velocity Banking? And where are you at in 7.5 months with Velocity Banking? Let's take a look. Before I share this with you, I want you to know that if you're still in the traditional banking way of doing things, just be reminded of this, okay? The horse and buggy. Be reminded of the typewriter. Be reminded of the telegraph. Okay, just be reminded of those things. This is the 21st century, and we should be banking like it's the 21st century. Now, I want you to tell me, which one is the Velocity Banking method? Which one is the one that's going to place you much less in time frame? It's not going to take you 30 years. It's going to take you about, let's say, 8, right? And of course, there are even ways, for those that have the Money Max account, you realize that you can even go way less than 8 years because you have a system that is making sure that every dollar that you put in, right, to the system is being tracked, allocated, and distributed the way you want it to. You're in full control. It does not have access to the bank accounts, but will show you automated Velocity Banking so that you can collapse this time frame. Which one? Which one is Velocity Banking? Which one is going to save you in time? Which one can you see yourself doing? We see this? Look at how much is going down towards the interest, because you know this side is going to be the interest, right? That's the side that has a lot of money going away from you. And on this side, you have that $15,000 deployed to that principal one time. But where are we in the 7.5 months? Right? Where are we? And where would you rather be? That's the question. Where would you rather be? Look how much you're going down each month as you pay the way the bank tells you to pay. It's only going down $1 each month. $1. Oh, this one went down $2. $1. Every now and then they'll tease you. Okay? Look at how much is going down on the Velocity Banking side. Look at this. $76, right? From this one. And of course, it's going down by 2 because we're going to continue to pay until, right? That's right. Until we fill that $15,000 back up at the end of the 7.5 months. Okay? So as the 7.5 months pass by and we fill it back up, what are we going to do with the 15,000? We're going to hammer this again and again and again. And at the end of that 8 years, 8.5 years, not 30, not 40, and definitely like that one man, 50-year plan. Can you believe that? Let's wipe this out. So we saved you about 22 years. 22 years saved. And oh, by the way, over $175,000. You're only going to be paying with the Velocity Banking method about $52,000. Okay? In total interest. Why? Because you cut it out. Because you cut the interest out. That's what you're doing with the line of credit. Money that's not even yours. Oh, isn't that beautiful? So that's what we're doing with other people's money. We're using it as leverage. And that's how it's supposed to be. God bless you. Listen, I want you to continue to look at this. I'm going to get out of your way. And I want you to look at the description link. Check out all of those banks. Remember, it does depend on the region you're on. I say Vantage West for Arizona because I'm in Arizona. But please continue to look at all of those credit unions that we shared with you. Check on the links below. Make sure that you ask them questions. Sign up and get your line of credit so you can get out of those debts and so that that cash flow can go to you. God bless you, and we'll see you in another video.